All right. So long time no see, my friend. What is going on, guys? This is SDO, and forgive me for the ambulance or something that you can hear. But today I'm going to get through some a review that I've did for the past week for the 26th of June 2023 to 30th of June 2023. So this is a backtest that I've did for the last weekly range, and starting off, what I want to say is that I do not trade on Monday because there's a lot of updates that I did inside my trading because something was wrong or that I've learned more. But what I want to say is that I don't trade Mondays anymore because I always tend to take a trade into the direction in which I expect price to gravitate towards in the weekly range. So how do we determine that? First of all, this is a 15-minute chart, right? But let's think about this. Let's think about this like it was, let's say, a weekly chart, right? Let's take only this section right here, like these candles, and that's it with this in mind, right? So let's say this is a weekly chart. When we have this run below this sell side level into this fair value gap here, which is small, in the next weekly candle, so this week, we expect the price to move higher. So we expect, based on the narrative that we have, because we have this low to this high, this is our range, the equilibrium is around here, we took a level of sell side, so we're inside in a discount, and we expect the next week, I don't care about the 2 weeks, I don't care about 3 weeks, I only care about the next week. So we are going to predict, not react. We're going to predict that the next week is going to be an up closed one. So I have a level of sell side, and we are going into the new week with the premise that we're going above. So I have a level of sell side taken here, discount, and with that in mind, saying that this is a weekly chart, then we go back into the daily chart. In fact, let me show you. Trading June. I have lots of these. Big archive. Business note, trading journal, June, week 5. So these were my weekend premises, right? So look, inside the dollar index, I believe price is now inside a risk off scenario in which we expect higher prices onto the 10375, 104,699 level. Therefore, for our next weekly candle, we expect the dollar index to rally. So this is the only thing I care about. I only care about the rally. I only care about the direction. And what do we do with that? We go into the daily chart, and now we're going to frame our narrative. So I have a level of sell side being taken into a fair value gap into a monthly range equilibrium. These are three major confluences with the higher time frame expectancy. We have a level of sell side being taken into a fair value gap, which is discounted because if we look at this range from not that low, my bad, from this low to this high. Why this low? Because this created this run higher. So this low to this high, this is obviously a discounted array. We also have these big down close candles. If we look at the 25% and also the volume imbalance here, which is the liquidity void below this, between these. So by the way, in between the lines, we have this opening, higher, lower, closing, and then the next candle opens here. So the opening in this candle is not the same as the closing in this candle. So this is a volume imbalance, an area which is um, only has wicks, and there's a difference between the opening and the closing. So we have that confluence, we have the monthly range equilibrium, we have the fair value gap, we have the sell side level being taken, we have the market structure shift with the narrative that we're going to the weekly chart above. So what do I expect? I expect to return back into a discount on Monday or Tuesday, and then on Tuesday I expect rallying. Let's look at the chart and let's look at what happened inside the XI. And why am I making this video? For you to understand how you can frame your narrative, right? And how to find high probability setups. So looking at the daily chart, what did we do? This analysis right here. This was done on Sunday, I believe. Yes, on Sunday. And this is the chart now. So that's the structure shift. This is the sell side level being taken. There's nothing modified in here. I had this Monday, Tuesday low of the week, and I'm going to talk about that in the future episodes. Then Wednesday, Thursday, and Friday. So we had this, if we look at this, we have this opening of the order block. We have the mean threshold, which is the body from this here to this. This is the bearish order block. We had the mean threshold, which is the 50%, and then ultimately the buy side. So we can see that price went into the opening, went into the mean threshold, but didn't reach the buy side. So that is how you use the weekly candle expansion to understand your direction, and then inside the daily chart you frame your narrative. But what do you do with that narrative? You go into the intraday charts, and as I told you, on Monday and Tuesday I would expect, let's say this is Nasdaq. On Monday and Tuesday I would expect lower prices only to send price higher. So what would I do? I would not trade on Monday and Tuesday. I would not trade because my trades are only within the weekly direction. So therefore, what does that mean? That means that we do not trade every day. And that is the path of high probability trading. Why am I saying this? Why am I telling you this? Because I've did the mistake of going into the market every single day, and I've been frustrated. And let me tell you something. If you try to go long in these days, and let's say you get something, let's say you get a 1.5 R, but then you lose 2. First of all, you would be scared to go there on Wednesday and long it, number 1. And 2, you would be in drawdown. Not that a drawdown is a problem, but now let's imagine that you stayed on Monday and Tuesday. Let's imagine this is Nasdaq and not the dollar index, because we do not trade the dollar index. Let's assume this is Nasdaq. Let's assume you have the rules that you're not going to trade until Wednesday, until the chart shows willingness to go into your direction. So therefore, you catch this move not from the low, because that's not realistic, but let's say from here to the consequent encouragement of this wick, which is the midpoint, or this buy side, because on a 15-minute/1 hour chart, this is the level of buy side. This is the only trade you've taken this week, with the expectancy that we have a higher probability that we're going to go here and here. What would that do for your trading? Exactly. So more trades does not equate to more money. Number 1. Number 2, what happens if you lose this trade? Then you're going in again, whether that's the next session or the next day. But you have to have max loss per week parameters, and also you have to have max loss per day parameters, or max loss per session, because you might try and force your idea into the session and you lose 2 times. Therefore, you have to know yourself. So in order to know yourself, you have to go into the charts and study and see when you get impulsive, when you're not. So let's just get into the weekly backtest that I've did, and I wanted to share this with you. And by the way, I saw this is what motivated me to do this video, because, and this is a trade I took. I also forgot, yeah. Because I saw I believe Rima's cake with FXA, And by the way, happy birthday if you're watching this today. I know your birthday was yesterday, but happy birthday. And yeah, that motivated me because I totally forgot about the mentorship in itself. Because I've been busy with my things, but I believe that you guys deserve the videos. So going to the back test. Okay, so based on what I've told you, I told you that I'm not gonna trade Monday. Why am I not going to trade Monday? Because I expect higher prices. What did we do on Monday? Trade lower. Why? Because we needed to get into a discount. And based on my analysis on DXI, I know I've talked about this inside the intermarket relationship clip, but sometimes, I mean, the DXI, the dollar index, and the Nasdaq, they do not get, they do not move in the opposite direction. They are not inversely correlated. Sometimes it takes up to 12 months for Nasdaq or DXI to catch up. So if you have higher prices on the DXI, we can also have higher prices in the Nasdaq, but only for like a period of 6 to 12 months. So they do not have to be quote unquote equal. Every single one handle move in Nasdaq doesn't have to be every single pip on the dollar index. So where am I looking for longs, and how do I know that the low of the week was formed, and how do I know that where are the best probability longs in a week in which we believe that the price is going to go above? And I'm going to tell you this now. So you know the power of three: the accumulation, manipulation, distribution, and then close. This is a bullish week, so we're going to have accumulation, manipulation to the downside, so the fake move, distribution, and then close. This can be applied not only on the daily chart, this can be applied in the weekly chart. So what do? We're going to take the Sunday's opening price, which is the opening of the week, Sunday's opening price, the Sunday's opening, the first candle's opening, and then we're going to look for the best longs inside the week below this level. Do you see how price went up? Then down below it again to accumulate more longs into this fair value gap, and then went higher above this high and never came back. Therefore, knowing that we're not going to trade on Monday, we completely saved our ass here. I mean, yes, you could have traded London into this buy side, but I do not look for that. So we had the key level on a daily chart in which we wanted to see higher prices. So as we tapped into that, and as we went on and then shifted the market right here. Why? Because we have this run below, premium discount. Perhaps this is not a premium, but the price reacted from this, not reacted, but the price went into this fair value gap below and then failed to go below this and this, and then consolidated. A new day started. This candle started the day. We went higher, creating a market structure shift, and then when we see this, based on our understanding that we have this key level on a daily chart and a weekly chart, based on the understanding that we want to see higher prices from this level, this market structure shift now becomes valid. So what are we going to attack? First of all, this buy side, which is the nearest low hanging fruit objective. Then we're going to take the fib from this low to this high here, 50%. I believe it's around here. So we have the mean threshold of this order block, the rejection block, which is the two bodies that are close, and the highs, the fair value gap, the order block, mean threshold, again, rejection block, consequent encouragement of the week, every single premium array. And then we're going to get into this price action. So Tuesday, expecting weekly range expansion. This is the silver bullet. So what do we have here? Looking at the 15-minute chart, what do we have? This low, This is the 10 o'clock hour. So we're taking on this buy side. But what did I say? What's next? The order block. Why do I think that this order block is a high probability? Because that is inside a premium. But not even inside the premium, if I remember well. It is not even inside the premium, so it is in a discount. So that is a very high probability. Therefore, at the 10 o'clock hour, we have this major level of sell side being taken inside this 15-minute fair value gap. If we take this low to this high, that is a clear discount. We're going to drop down into a 1-minute time frame into this fair value gap now. And this is the thing, guys. One of my biggest mistakes that almost made me lose my faith in trading was the targeting aspect. That I was targeting like this high here, and then I was upset because I was wrong, because I would get out of break even here perhaps. But the true thing is that the most amount of money, guys, the most amount of money would be made and will be made with moves like this. So you have this high to this low premium. We dropped below a major level of sell size inside a 15-minute time frame. I do not need a market structure shift based on my model. Perhaps sometimes I need, but when I have a sell side liquidity level being taken like this, I do not necessitate a market structure shift and within the silver bullet time period. And by the way, we also have a market structure shift here, but I would not take this personally because we have this one lower, this if making this fair value gap efficient, and then a run higher above the short-term high. We have a sell side level being taken from this low to this high. That's a discount fair value gap, which is also a BPR because we have one single passing and one single passing. For those that don't know, this balanced price range is a very it basically means that this right here is a balanced price range. What does that mean? It means that the price is completely balanced, and therefore if we are correct, it doesn't have to go past it. As you can see here, if we get this into the right side, the bodies of the candle stayed inside, the wicks did the damage. But perhaps this is our market structure shift, but I will not consider that my market structure shift. We come back, we buy it here at the high because the BPRs usually are activated at the high. We do not want to see even the consequent encouragement, and then rallying in absolutely 2 minutes to our target, which is the low to this high, the premium. What do we have inside the premium? The order block, yes, but that's a very low hanging fruit and it was already tagged. Then we're going to look for the premium CB, perhaps the consequent encouragement, and then after that we can take the consequent encouragement of this wick, which is the midpoint, or the order block in itself. This is what I wrote here. Wednesday's PM session, Saturday AM session, we had no fair value gap to engage, plus targets were reached ahead of 10 o'clock. Therefore, we would not engage. So it is very important also to journal, because this was one of my mistakes. I did not journal the times in which I did not see my model. Yeah, these are some notes for me. Thursday AM. So looking at the Thursday AM session, we have the fair value gap that I told you guys about, I believe, at the beginning of this video. Fair value gap there, we drag that in time. We have also rejection block, which I told you guys what it is. It is these two bodies being closed, the lowest down close here. These are basically equal, but sometimes when we are extremely bullish or extremely bearish, the price doesn't even have to go below the sell side level. It only has to go below the rejection block. And what do we see? We see, first of all, this is a bullish order block. Okay, but the main thing here is that fair value gap in the left side that I've showed you. That I've showed you in the beginning of the video. Therefore, if we want longs, if you're looking for longs, what do we need? We need the level of sell side being taken from this low to this high. This is our range. The discount, sell side being taken into a fair value gap, a 15-minute fair value gap, and we're looking for what? From this low, when this low is formed, to the high, a premium array, which is what? The consequent encouragement of this wick, and also this fair value gap, also this breaker here. So we're gonna zoom in on this on the 1 minute chart. Right here, perhaps somebody will get tricked, but I'm gonna explain to you my criteria of a market structure shift, because many people would take, let's say for example, this here is a market structure shift, but I will not take it personally. So this is the 10 o'clock AM silver bullet begins. We have this here, high, low, and then this coming back to this fair value gap, failing to go lower, this coming back into this fair value gap. So this right here would not be considered a market structure shift, because one, we have these relative equal lows, but two, we have to wait and see whether this sell side is going to, and I would never ever take an entry from this fair value gap. Never. Okay? So this only comes back to this fair value gap, so this is not a market structure shift. And then it goes lower, sends price lower, and then there's a macro between 10.50 and 11.10. I believe you guys know this already, but there's a macro between 10.50 and 11.10, which usually reverses if the AM session was indeed bearish, and we also have a higher time frame drawn liquidity. So clarify the market structure shift. We have no market structure shift here, and as I told you, some models do not require one. This is an example. So we have a 50-minute old buy side imbalance outside inefficiency, which is a fair value gap that is up closed. We have the 50-minute rejection block. Look at the bodies of the candles here. And what do we have here? We have fair value gap inside the 10 to 11. That's our silver bullet. Fair value gap goes higher, or the block. Here, it trades above this SIBI, which is a sell side imbalance, buy side inefficiency, trades above it, closes above it. Therefore, the price is going to use it as support, or as normal support, how you guys would expect a support level to react. So we have this. Once it closes above it, we're going to expect the price rejecting this area like it does here. Look at the bodies of the candles remaining above that, and then order block, we're going to take a partial either at the consequent encouragement of the week or at the buy sell liquidity, and then ultimately we're going to look for the consequent encouragement of that premium 50-minute wick plus buy sell liquidity on a 1 minute time frame. Okay, Friday's price action, there is nothing important to be seen inside Friday's price action. There is nothing important to be seen. So this means what? If we look at the chart on Monday, if you look at the chart on Friday, and you see this level of buy side being taken, I know that there was another level of buy side here, and this is 10 o'clock. I do not have a discount. I do not have a level of sell side being taken, a major level of sell side being taken. I only have this return into this bullish order block, yes, but it is above a level of buy side, which I would never engage. So, what do? Absolutely nothing. And based on the fact that it is Friday, and as I told you in January, as I told you in February, Friday usually has a tendency to return back into the weekly range. So, we are not going to trade on Friday based on our weekly premise, because it is counter the weekly premise, because the market, as I told you guys about a weekly candle, the accumulation, manipulation, distribution to the upside, and then the close the close comes back into the weekly range. So that is what we are expecting. Therefore, Monday and Friday are not tradable within the premise. Perhaps they might be, because we can see here that we went to the upside, but I do not care. So Monday and Friday, we do not trade it. I do not trade it. You can trade it if you want, because I'm not implying any model on you, but I don't trade Monday and Friday. And based on knowing this, based on only taking these trades right here, imagine only taking these two trades. There is no loss. These were high probability trades because we were inside the weekly direction and also the daily direction. And you would just imagine this. Now compare that versus me going into the market on Monday trying to go short, because I know that Monday has a tendency to go back below for a discount, and me getting stopped out because that is not the direction of the weekly range in itself. Then I get stopped out the second time because I'm trying to get greedy, and now I have two stop losses. It does not matter whether that's 0.5 or 1%. Now I have two stop losses. Now 1% loss is nothing, right? But imagine what that does to your psychology. You just started a week and you already have two losses. And not only that, but if you are trying to trade against the weekly range, you are going to be like a dog chasing trades. And I've been through that. So do not do that. I would chase this short, even though that is ugly. I would never, ever, ever trade that. I would chase this buy here, even though I knew that there was sell side, and then getting stopped out, and then being too afraid to go into this. These are some struggle points that I've had in the past and in the recent past. And I hope you guys gained some value. I don't even know how long this video is. 27 minutes. Crazy. I hope you guys enjoyed this video. I hope you guys gained value from this video. And I'll see you the next time. Peace.